Hello traders, welcome back to Forex Geek, where you dive deep into the tool that can help you make smarter trading decisions. In today's video, we are going to be talking about the monthly pivot point, a powerful tool that can enhance your trading strategy. Understanding how to calculate and interpret these points can provide you with a very valuable insight into the market trends and potential turning points. By the end of this video, you should have a clear grasp of how to use the monthly pivot point in your trading decision and how to avoid common pitfalls. So stay tuned as we explore these essential concepts that can help you become a more informed and confident trader. Now we start by understanding what the monthly pivot points are. The monthly pivot points are important indicators in the forex market that help you identify potential support and resistance level. This level can guide your trading decision by showing you where price might change direction. To calculate the monthly pivot point, you can use the following formula. The pivot point is calculated by let me add my indicator first. The monthly pivot point. The monthly pivot point is calculated by the previous month's highest point, the highest point of the previous month candle plus the lowest point of the previous month candle, the lowest point of the previous month candle plus where the candle closed, the close of the previous month candle divided by 3. I go again, it is calculated by the pivot point. The monthly pivot point is calculated by the highest point of the previous month candle plus the lowest point of the previous month candle plus the close of the previous month candle, all divided by 3. This calculation gives you the central pivot point, or the central point around which the market may move. Once you have the pivot point, you can find the support and resistance level. This calculates as follows. If you want to calculate the resistance 1 or the R1, the resistance 1 is calculated by multiplying 2 to the previous month's pivot point minus the low of the previous month's candle. I go again, you multiply 2 to the pivot point minus the low of the previous month's candle. That is for the resistance 1. The support 1 or the S1 is calculated by 2 times the pivot point minus the high of the previous month's candle. Now the resistance 2 or the R2 is calculated by the pivot point plus open bracket the subtraction of the highest point of the previous month candle minus the lowest point of the previous month candle. I'll take it again. The R2 or the resistance 2 is calculated by the pivot point plus the subtraction between the highest point of the previous candle and the lowest point of the previous candle. That's how to calculate the resistance 2. The support 2 is calculated by the pivot point minus the subtraction between the highest point of the previous candle and the lowest point of the previous candle. I take it again. It is calculated, the support 2 is, or the S2 is calculated by the pivot point minus the subtraction of the highest point of the previous candle minus the lowest point of the previous candle. These levels help you understand where price might struggle to move beyond or where it could bounce back from. For example, if price approaches the R1 and starts to reverse, let's look at this on a daily time frame to make it a little bit clear. If price if price gets to the R1 or the resistance 1, if price gets to there and start reversing, this may indicate a potential selling opportunity. This may indicate a potential selling opportunity. And if it hits the S1 and rebounds, this could signal a potential buying opportunity. As you can see here, it hits this area and it's showing us potential buying opportunities. It is also essential to interpret these levels correctly. If price is above the pivot point, it generally indicates bullish sentiment, while if price is below, it indicates bearish sentiment and we need to anticipate downward movement. Understand how to calculate and interpret monthly pivot points can significantly enhance your trading strategy. By incorporating these levels into your analysis, you can make more informed decisions about when to enter and when to exit your trades. Now let's look at some trading strategies we can use the monthly pivot points for. Now we understand that the monthly pivot points, and now that we understand what the monthly pivot points are, how to calculate them, let's explore some effective strategy to incorporate these levels with. We use the pivot point. Using the pivot point, it can help us make better trading decisions by providing clear entries and exits. One common strategy is using the pivot point as an entry signal. Once you see any sign of bouncing as S1 level, it shows a common sign of long position. So it's trying to say that when price approaches the S1 level or the support level and bounces back, this is a good opportunity to enter a long position. So at this area would be a good opportunity to enter a long position. Conversely, if price nears the resistance level, R1 and decides to reverse, this may be time to consider short positions. This is the time to consider short positions, and if you want to enter the trade, you would have to enter when price gets to that point. You put your stop loss, you enter the moment price gets to that point and begins to reverse. You put your entry at that area. Once you notice the reversal, you put your entry at the reversal zone. You put your stop loss just above the resistance level. In case of a support level, you put your stop loss just above, just below the support level. This is how we set our resistance. This is how we manage our risk. This is how we manage our risk, so that if the trade doesn't go as planned, our losses might be limited. Similarly, price if you see price trying to go towards the support level, always don't forget to place your stop loss below the support area. This is our support. Put your stop loss just below that area. If price is above both support, now let's look at if we can combine our pivot point with our moving average. This is another effective way of making use of the pivot point, by combining it with technical indicators. For instance, the moving average. This is to confirm trading signals. So if price is above both the pivot point, if price is above both the pivot point and the moving average, it strengthens our decision to go long. If it's above both the pivot point and our moving average, it is more reason to go long. The same with our selling opportunity. If it is below the moving if it is below the moving average and if it's below the moving average and also below our pivot point, we can decide to take a sell trade at that area. It gives us more confidence in our trade, keeping in mind that the market condition can change rapidly. So always prepare for volatility and adjust your plans accordingly. It's also important to consider multi-time frame when applying this strategy. For example, if you are trading on the daily chart, it may be helpful to look at the weekly or even the monthly chart for additional context. This border this border perspective our border perspective can help you identify strong trends and make more informed decision. By incorporating the monthly pivot point into your trading strategy and combining it with other indicators, you can enhance your ability to spot po ten tial trading opportunities in the market. Remember to practice this strategy on a demo account before applying it on a live account to build your confidence and refine your approach. Alright traders, we have come to the end of this video. Do well to engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, subscribe and turn on the notification bell so that you will not miss out on more trading tips and strategies. Thank you for watching and I will see you in the next video.